Navigating the world of unexpected financial curveballs can feel like trying to dodge raindrops in a thunderstorm, which is where looking into something like the Peak Credit Union personal loan comes into play. Everyone has been there when the car makes a strange noise, an unexpected medical bill pops up, or you finally decide to tie the knot and suddenly your bank account is looking a bit light. This specific personal loan offers a way to stay on top of those expenses, whether you are trying to get ahead of your debt or just handling a sudden emergency. You can use these loans for a pretty wide variety of needs, including paying off other debts, funding weddings, taking a much-needed vacation, diving into expensive hobbies, or tackling home repairs and moving costs. They let you borrow up to $50,000, which is a significant chunk of change that can cover major life events or help you combine multiple high-rate credit card balances into one single, predictable monthly payment. When you dig into the data of how this tool actually works, the numbers tell an interesting story about who can benefit the most and what the trade-offs are. Peak Credit Union splits their loans into secured and unsecured categories, and the difference in the starting numbers is quite noticeable. If you go the secured route, your annual percentage rate can start as low as 4.75%, which sounds incredibly appealing if you have the collateral to back it up. On the flip side, if you are looking at an unsecured loan where you do not need to pledge any collateral and rely just on a qualified application, the annual percentage rate jumps to a starting point of as low as 14.00%. Looking at the broader picture, the fixed annual percentage rates actually range anywhere from 5.25% all the way up to 21.50%. This wide range exists because individual rates vary depending on your credit score, your credit report, and your debt-to-income ratio. Your exact term is also determined by the total amount financed, meaning the final cost of your loan is highly tailored to your unique financial situation. Evaluating this loan program reveals some clear advantages for people trying to solve specific financial pain points. On the positive side, having access to up to $50,000 gives borrowers a lot of breathing room to handle substantial expenses without having to scramble across multiple lenders. The fact that they offer flexible borrowing options and look at your entire financial picture rather than just rejecting you based on a single credit score number is a huge plus for anyone whose credit history might have a few bumps. It is also really nice that checking your initial rate might only involve a soft inquiry, which means you can see where you stand without hurting your credit score right off the bat. Furthermore, using this tool to consolidate high-interest debt into one predictable payment can be an excellent way to simplify your monthly budgeting and potentially save cash on interest if you qualify for the lower end of their rate spectrum. However, no financial tool is perfect, and there are some definite drawbacks that you need to weigh carefully before signing on the dotted line. The most obvious downside is the massive gap between the best advertised rates and the maximum rate of 21.50%. If your credit score or debt-to-income ratio is not in tip-top shape, you could easily find yourself stuck with a fixed annual percentage rate that makes borrowing quite expensive over the long haul. Another con is that while checking your rate is safe for your credit, moving forward with the full application triggers a hard credit check, which will have a small, temporary negative impact on your score. There is also the reality that rates, terms, and conditions are subject to change and vary based on the age and condition of your collateral if you choose the secured route, adding a layer of unpredictability to the planning process. To wrap things up, the Peak Credit Union personal loan serves as a highly flexible financial tool that can effectively address pain points like mounting debt, sudden medical expenses, or temporary gaps in income by providing up to $50,000 in funding. It offers a solid mix of secured options starting at 4.75% and unsecured options starting at 14.00%, with fixed rates capping out at 21.50%. But you have to remember that diving into any personal loan carries inherent risks that you cannot ignore. If you end up with a rate on the higher end of that 5.25% to 21.50% range, you risk trapping yourself in an expensive cycle of debt that could strain your budget. Since your individual rate and terms are heavily dependent on your creditworthiness and debt-to-income ratio, anyone considering this tool needs to carefully calculate the long-term interest costs and ensure they can comfortably manage the predictable monthly payments before committing to the hard credit check.